All right, so today was CPI and we took a couple trades. We are green on the day, and I want to go over the trades that I did take, what I was thinking, what I was looking for, what my bias was, and if my bias played out or not. So I came into the day feeling pretty bullish. Why was I bullish? Because we had, a couple SMTs. We had an SMT here, bullish SMT. We were pushing up, right? We were making lower highs, higher lows, excuse me, and we just continued up. So I thought, we would run for some type of sell side liquidity, come up and start getting real bullish price action. CPI was at 830. We had a massive candle down. This candle went ahead and took London lows. I believe ES might have ran for Asia lows. Yeah, so as you can see on ES, the CPI candle went ahead and took Asia lows. So we had a bullish SMT. So we had another bullish SMT with this bullish SMT. So automatically I was looking for longs, and I was really long biased. I was like, okay, I want to see something. We had one potential setup here, 840, but it wasn't within our macro, so we didn't take it. We saw that price inversed this 1 minute SIBI. I didn't take it because it wasn't in our macro, like I said. And also, I don't like taking inverses unless liquidity was taken. Yes, these London lows were taken, but what happened was we didn't get a inverse right away, right? We consolidated, had a push up, came back down, then inversed it. This came down and took these lows barely, but I would rather have seen the data lows get taken before getting an inverse. So I didn't take anything here. It was outside my macro and it wasn't in my trading plan. It wasn't my setup, so I didn't take it. I was marking things out just to see, okay, so we had this bullish breaker here because we had our low, high, a sweep of these 1 minute equal lows, and then we pushed up, so we had our breaker. We had our negative 1 to 2 standard deviation. Typically, we like to see negative 2 to 2.5 where a reversal will come. But, we inversed, we continued up. We had this order block, found support on there, and continued up. So we didn't take anything. 850 to 910 is another macro, but it's a low probability macro because open is at 930. I don't like taking it. I believe that this macro typically just generates liquidity, but some days like here, we just continued up. So what do? We wait for the next macro, 920 to 940. Now, mind you, at this point, I'm still feeling very bullish. 920, a 20 to a 40 macro to me is almost always a continuation macro. And one of my rules is I do not take a reversal in the continuation macro. So at 920 to 40, I would not take this reversal. I was still being bullish. But I did see that, hey, look, we had this 1 minute create inverse after sweeping these highs, and then we created this breaker, right? So I was like, you know what? Even though it's not my setup or anything like that, I'm gonna go ahead and I took one micro, so it's like barely any type of risk. I was risking $62, something like that. We came down, we pushed down, oops, and then started pushing back up, and I automatically thought, this is not my setup. I'm breaking my rules. I'm just gonna exit, and I did exit in profit about 15 points. And I was like, I don't care what happens. I'm gonna wait until the next macro because then something might show up. So we waited through all this price action, which was not very clean. As you can see, it's up, down, up, down, up, down, up, down. So we're waiting for our 950 to 1010 macro. This macro is typically a retracement or reversal macro. If it's a retracement, you'll have your continuation. So what I wanted to see was a push up, right? Probably sweeping these highs, then get an inverse and a push down. We didn't get it. But what we did have in here was a 15 second. 15 second we had a 15-second idea of what I was talking about on the 1 minute, which was this 15-second came up, swept these highs with this 15-second BISI, and then inversed it, and then I took my shorts. But a couple seconds, maybe a minute after taking these shorts, I said, you know what? Even if this trade works out and runs in my direction, I'm breaking my rules and I'm creating bad habits. And habits are what ultimately leads you to success or failure. So even if this trade would pay me, it's not my rules. I don't like trading the 15 second anymore. I used to, and I lost so much. So I only take my trades off the 1 minute setups. So I exited. I was like, even if this runs to my favor, it doesn't matter. It's not my rule. It's not my setup. I'm not going to take it. and I took a $50 loss on that. So with that and that, I was down around $13. It's not a big deal, right? And our draw on liquidity was Asia lows right here, which got hit. At this point, I'm like, all right, ES is already, I believe, taking previous day lows, and I'm like, let's wait until the next macro, which is 1020 to 1040, our continuation macro, right? Like in this macro, this is when I'm thinking we should more than likely see something happen for us to run the previous day lows. Now, I saw this 5-minute CB in here, and I wanted the price to come in here. So I wasn't 100% confident on this trade. I was 70 to 80% confident. I would have been 90 to 100% confident if we did come in this 5-minute CB and reject it. But what made me feel good about this trade, which brought my confidence to a 70 instead of like a 50 or a 40%, was the fact that on the same 5-minute, ES did come into that 5-minute. As you can see, ES poked into this 5-minute CB and rejected. So I liked it. So I was like, you know what? It's a fair value gap SMT. That's something we can call it, as you can see. So I was like, you know what? I like it. Even though ES already ran for these previous day lows, the draw on liquidity was very clear for NASDAQ, in my opinion, and Q was going for these lows. So as soon as I saw this impulse candle up, sweep this immediate minor sell buy side liquidity, chop around, then we inversed. I was like, all right, I wanted this candle to inverse, but it didn't. But then when this candle inversed, I was like, all right, I might have missed it because now we're already down 20 points, right? It was very volatile. But as soon as this candle opened up, I was like, you know what? I'm going to trust that. I'm going to take it because I did want it to close probably around here, something like that. But I was like, you know, I'm just going to trust that I'm going to take it. Then we formed this breaker. I saw we formed 2 SIBIs. I started getting nervous when we were chopping around. I was like, I said in my live, I was like, I want this to act as a breakaway gap. I don't want this tap back into or filled. So I was looking at this and I was getting nervous. I was like, I'm probably going to exit this trade. And I was like, you know what? Instead of me being scared and nervous, let me add in. So on this candle at 1036, we pushed up. I actually added in a position here and then we came down. But as we were kind of chopping around here, my nerves got the better of me. I exited half of my position. And as we pushed down, I exited the rest. So 70 points we caught. It was about a 2R. But it was a good trade. So I didn't keep my take profit at the previous day lows. I was like, you know what? It looks kind of bearish. We might run to previous week lows. That's what I was thinking, possibly. But as soon as I saw that we were kind of rejecting off of the previous day lows, I exited and I was all right with it. And then right after that, I locked my account and just got out completely. So, right, every single one of my trades would have hit TP, but I'm trying to build good habits. Even if the price looks good, if it's not my setups, if it's not in my time frames and not in my time macros, I'm not going to trust the trades. I'm not going to take the trades. I shouldn't have even wasted mental capital on these trades, right? But all these trades would have ran. I could have left this running the whole time. Would have been 200 points. Coulda, shoulda, woulda. I didn't. It just wasn't in my time frame. It wasn't my trade to take. So I was all right. This trade we let run. It ended up being good. Hindsight 2020. This trade, look at this, would have ran 300 points. But all good. I'm happy with my performance today. Very happy with my performance today. I was able to switch my bullish bias relatively quickly when I saw what the market was giving me. And I'm happy about that. And then you know what I did? I went on ES. I opened up my Robinhood. And around here, I took SPY calls. And I'm swinging SPY calls. So let's check out our Robinhood. So, if you can see that, let's bring this up. We are up 344% on our SPY calls. That's cool. I'm going to swing those because I believe that SPY is going to be running to possibly all-time high. Not all-time highs, but more than likely, let's see. I feel like ES, aka SPY, is going to be running to these previous week highs just because of how impulsive this move was, right? And then we also have our low, high, lower, low, creating our bullish breaker. We do our standard deviations off of this high to this low. And look at this. We have our -2 to 2.5 standard deviations where at all-time highs. So I'm expecting all of these equal highs here at least to get taken. Let's get rid of these indicators and see what I'm looking at. Look at all of these relatively equal stacked highs. I'm expecting all of these to get taken. This looks like a beautiful market maker buy model on the higher time frame, does it not? Look at this. Original consolidation. We drop, we drop. We have our smart money reversal right here. This 4 hour gets inversed. We have our low risk entries over here. CPI brought us back down and pushed us right back up. Right back up. Creating breakers right here. We have our low, high, lower low. Closed strongly, displaced above it. Took this high, didn't get an instant rejection. I'm expecting us to continue up. I am expecting ES to go another 112 points. Maybe not this week, but eventually. And I did just say that I'm not like trying to plan or predict, these high time frame moves. But I don't know. I'm feeling like it. Why? Because look at this. We made a low, a higher low than this low and this low. Right? And now we're making higher highs. Now these highs are higher than these highs. So I'm expecting us to continue up. My opinion, we'll see. Now if you zoom out even more, doesn't this look like a market maker buy model? Look at this. Where you have your sell side of the curve, all the way down to here, sweeping all this liquidity. We had our smart money reversal right here. Come up, right? Retest into these fair value gaps. Our golden weekly inverse fair value gap literally caught support on the weekly. If we go right here. We caught support on this weekly inverse right here. Beautifully nonetheless. And look at this, we're pushing up. Now, this can also be an immediate rebalance on the weekly. Depending on what happens tomorrow. If tomorrow starts closing halfway through, I'm going to think this is an immediate rebalance and we're going lower. But with this candle, with this massive wick up, which popped into this monthly BISI, rejection came up, immediate rebalance on this weekly candle, and now we're pushing back up. I think we're going to these previous week highs, and I think we're going to see all-time highs. So we'll see. Besides that, catch me live tomorrow. We'll be live around 7:50 to 8 o'clock, and we'll see what we can catch. So I'll see you guys tomorrow if you do decide to join. If not, best of luck with everything. Best of luck with your trading, and yeah.